The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. Now, private equity activity in Asia is taking a fascinating turn, and one sector is capturing the spotlight: K-beauty. Now, once a niche export of skincare and cosmetics from South Korea, K-beauty has exploded globally, driven by innovation, strong branding, and the Hallyu wave. Now, it's reshaping the private markets landscape. Major private equity players like Blackstone and KKR are making strategic moves, acquiring stakes not just in consumer-facing brands, but also in critical supply chain companies such as packaging specialists. Now, these investments highlight how private markets are fueling international expansion, scaling innovative products, and creating new avenues for value creation. Now, the Business Times has done a lovely piece on this, titled "Blackstone KKR Drive Surge in Private Equity Deals in Korean Beauty." So to find out more, I'm joined by the author of this article, Wong Chia Peck, senior correspondent at the Business Times. Chia Peck, welcome to the show.
Thank you, Hongbin.
Thank you so much for joining us. Well, Chia Peck, your article highlights a surge in private equity deals in K-beauty. What's driving global PE interest in this sector?
I think, first of all, PE sector, they're very much driven by trends and long-term trends. So for this, right, it's not kind of just burst into the scene. It's grown as Hallyu wave, like you mentioned, Korean culture, movies, food, and beauty products just surged into consumer conscience pretty much throughout the world now. It's not just an Asian phenomenon. So I give you some data to back this up. Basically, in 2024, South Korea was the world's third largest exporter of beauty products. So that's up from one place from 2023 when they were number 4. And in value terms, it's a 20% on-year increase to about $10.2 billion US dollars. Now, there are quite a few forecasts, but one that I think is more recent would say, it says that the forecast that the global K-beauty product, they put it at about $14.7 billion US dollars now, because, you know, it comprises more than exports, obviously, could grow by about 9% annually between now, 2025, and 2033 to reach about $32 billion US dollars then.
Wow.
So that's a huge trend for growth. And generally as well, private equity funds, they like to, for the consumer sector especially, they are seen increasingly to be deploying capital into trends which are culturally aligned and also aligned to the broad thematic investment themes. Now, typically, these involve like healthcare, infrastructure. So for the K-beauty, because there is also that wellness element in it. So I think that's why it's really taken over and investors are sitting up. Foreign investors, the domestic M&A scene within the K-beauty is also very active. So like this company Gudai is not very well known in Singapore. At least it was the first time I heard of it. But in South Korea, it's big. It's known as the country's version of L'Oreal. So they've done quite a few big deals as well. And what we are familiar with in Singapore, for example, Gudai recently teamed up with another company to spend about more than $100 million US dollars buying a stake in Skin Food. Yeah.
Okay, very interesting. But how does the K-beauty phenomenon, differ from other consumer sectors that PE firms traditionally invest in?
For K-beauty, I think it's what from the market players and the deal makers that I've spoken to, it's really become very global. Like everywhere you go, you see a lot of consumers flooding the Korean version of Sephora, Olive. Right?
Olive Young,
yeah. And they like the very differentiated products for skincare. Initially, as a woman and rather lazy, and I was like, how many steps and how many products? But you see that long term, it does do improve your skin, and it's just a matter of habit and discipline, and that has kind of spread. The practice has spread, and one personal anecdote, Hongbin, I was in Phuket like 2023, and it was a wellness retreat, and there was like a beautician there talking about skincare, because you wear your skin your entire life, right? That was kind of her tagline. Now, she's actually from UK. She was using many Korean products. So it just shows you, right? It's really gone
Global.
beyond, it's gone global.
Right, definitely. I mean, PE investors, they are scooping up assets in this hot South Korean cosmetic products and personal care sector. But what makes K-beauty brands particularly suitable for private equity investment? Because you wouldn't necessarily put two and two together.
I think at the start, especially for the smaller brands, there are still a lot of startups in the smaller market capitalization space. Like my article focused on many of the bigger deals, for example, that, those two deals that you mentioned, the KKR, that was like $528 million US, and Blackstone, the deal value wasn't revealed, but it was a significant investment, i.e. should be at least half. Juno, which was valued at like $560 million US. So I left out the smaller deals because, for space constraints, right? But even a Singaporean private equity investor has gotten into e-commerce platform. The deal value wasn't revealed. So there are small deals that are going on. And the brands, basically, they appeal to PE investors because they are also, the PE investors, basically, they spend a lot of time crunching numbers. Not just that, they actually go to the scene like Blackstone's Eugene Cook, head of Korea, basically the deal maker for the Juno transaction. He told me about how many Juno salons he visited and which ones he saw, like where the visitors were mainly tourists at some point. And also, bear in mind, they spent more than 8 years looking for a deal in the K-beauty sector. So it's a lot of really looking at what consumers are after and also visiting the branches, testing out the services. And yes, I think that's basically how the PE firms look at where to invest.
Well, then in terms of growth potential and scalability, how does K-beauty compare to, other Asian consumer exports?
For beauty, it's kind of recession-proof, right? Even when the economy is not doing well, let's say maybe, touch wood, you get a pay cut or your bonus is smaller, maybe you don't splurge on the more high-end brands, right? Maybe you splurge. And that, I think the good thing about K-beauty is a lot of them are very price competitive, but the quality is still very good. So that's why it's gotten that kind of traction among consumers. And, investment money goes where consumers are buying.
Right.
So that's what's happening. And K-beauty is also quite broad. Like apart from cosmetics and skincare, there are also skincare device makers, which was actually the first big European investment in the sector last year.
Okay.
It was like $742 million US. So I think that's also drawing the attention of the other foreign PE players into this sector. So when you talk about medical device makers, right, it's also, these are devices that could be exported. You don't need to go to Korea for that.
Definitely.
Yeah.
So I want to touch more on that. I mean, in fact, Blackstone and KKR, they have targeted different parts of the K-beauty ecosystem, right? So what does this tell us about the PE strategy in sector-specific investments?
I think Hongbin, I've been covering finance for a long time, and I have to say the PE players are really among some of the smartest people I've met and spoken to. So two different sectors, right? So KKR, I think Samwa, the cosmetic packaging company that they purchased in full, is very defensive.
Okay.
This is my interpretation, and I have to specify I'm not a financial expert, but it's just really interesting because Samwa is the world's top 10 packaging maker for cosmetic brands, and their customers reportedly include Chanel, L'Oreal, LVMH. So, but no matter what brand of cosmetics you buy, they need to be packaged. So I think that's pretty defensive. Right? So the demand is quite inelastic unless you don't use cosmetics anymore. But then you use skincare brands, right? And they come in nice bottles and tubs to entice you over other brands. So that, in my mind, is quite defensive. And I spoke to also Ms. Hong Hee-ju, the director from KKR in charge of this deal. And of course, at the time that I wrote this article, it was about a month after the US slapped 15% tariffs on all Korean exports. But she said that actually, Samwa's customers are also quite Asian-centric.
Okay.
So, yeah.
Right. Well, then how do private markets provide advantages over public markets, for scaling K-beauty brands internationally?
That's a very good question. I think for a lot of these K-beauty brands, particularly before they go public, or maybe the global trend is companies are staying private for longer. So maybe they don't want to deal with the regulatory burdens or constant updating of finances. There's just a lot of duties and costs you have to take into account of. So if for them to go global, right, like if they get a big global name to back them up, and with the kind of analytics and experience that these funds have in managing other sectors, and generally they will look at how to improve or bring their brands globally, take their brands globally, like Juno actually, has a salon right here in Singapore. And before, typically, they look at how to exit, right, a few years down the road with a nice yield on top of what they spent. So that could help them expand and go global. Not to say that domestic companies cannot help them too, but I think as with any company or startup, regardless of sector, it's always beneficial to have a strong backer with a lot of experience.
Definitely. Well, with deal activity surging $1.41 billion in 2025, are we seeing signs of overvaluation in the K-beauty private market space?
There were some concerns, as with any kind of popular hot market, right? The sellers kind of know they have the upper hand. And David Margar from Pictet, whom I speak to, so he's based in Geneva, and he's seeing that there are more so-called reverse pitches, as I mentioned in the article. This is when the buyers seek out the sellers instead of the other way around. So while he doesn't see much overvaluation concerns as yet, but basically as these become more frequent, the valuation definitely there's only one direction, which is upwards.
Right.
Yeah.
So how sustainable then is this private market interest in K-beauty if, consumer trends shift or competition intensifies? What are analysts saying about this?
Yes, there is always, with the issue where consumer products are concerned, right? They could follow trends, and especially with K-beauty is very consumer driven by social media as well.
Right.
So a Preqin report did say, whatever that's popular on TikTok this quarter may not be hot in the next. But so far, as we've seen this, global K-beauty trend, it's built up over the years. So to see that despite the US tariffs, South Korean cosmetic exports actually hit the highest monthly figure in September. It's I think about $1.2 billion US dollars. So that is pretty encouraging. And, I'm of a certain age, and before K-beauty products were popular, I've used European brands and I've used Japanese brands, and they are a lot pricier at the time. So I'm thinking like 15% of a relatively affordable kind of product range is still, consumers can still accept it, and the exports data support that.
Definitely. So could K-beauty also set a model for other niche, consumer sectors to influence private markets in a similar way?
I'm not sure about influence private markets. I would say it's more the other way around.
Okay.
Yeah, because private markets, generally the fund managers, the private market fund managers, they get the capital from their investors and they go seek out how best to deploy that capital. Then they look at, your consumer vertical, your healthcare vertical, or is it your infrastructure or property vertical? So they look at all of these sectors. But I can tell you is, since I wrote the article, public markets in South Korea, in K-beauty, have also been rather active. In fact, our very own sovereign wealth fund, GIC, late last month, regulatory filing showed that they bought $88 million US worth of shares in the company Cosmax BT.
Okay.
So that is, in the whole scheme of things, the funds that GIC manages in total is small. I mean, it's secret. They don't specify, but you can imagine. But that alone made GIC the third largest shareholder in the company. And Morgan Stanley also topped up its stake in another well-known K-beauty brand, APR. It basically is the brand for Medicube. Yeah. So, by the way, the shares of APR have gone up like 300% this year. And that, of course, Max was like more than 100%. So you can see that the whole sector is really, the investment flows going into the sector are really quite healthy.
Right. So, I mean, we talked about how because of this booming interest in K-beauty, a lot of investments are being poured into it. But what about the other way around? How might this surge in PE investment impact the global perception and growth trajectory of K-beauty in the next few years?
It could accelerate that flow because what you see in PE is when there is interest and the exits look healthy. Typically, they're exited via IPO. You take the private company to list or block deal, or they sell on to another PE firm, which is the case for Samwa, right? Samwa was bought by another PE company, TPG, in 2023 for around $216 million US dollars. So you see, it's TPG managed to exit within 2 years, more than double the money. So that is very attractive for investors to, really comb through the data, visit the shops and see what consumers are after. And for that, it would help to kind of drive it. You know what it's like, activity fuels more activity.
Right. So it's like they're both benefiting each other in this way. Well, before we let you go here, Chia Peck, overall, what does the K-beauty private market boom kind of tell us about the evolving nature of private markets here in Asia?
The two things that stand out to me is, number one, more foreign money coming into Asia. This is, some parts of it, initially you're talking about money, investors kind of diversifying away from US. And in Asia, also diversifying away from China. So K-beauty is, I would say that it's really kind of booming at the right time. I think it would have grown on its own very healthily, even without those global headwinds. But it's really kind of enjoying its spot in the sun, and that could go on for a while, seeing how more consumers are taking up with that, and tourists, and they're seeking for K-beauty brands and treatments and products. The other thing is that it's good to see that a sector that is uniquely Asian is really capturing the attention of investors. Like David from Pictet told me, the U.S. was like a natural market because of the high percentage of Asian population. But in Europe, it's also taking off. And even in U.S., if you talk about the African Americans, right, obviously their skin tone is different from the Asians or the Caucasian. But Turtle, famous Korean brand, they took off in the US because they formulated the skin tones for this very important segment of consumers.
Right, definitely. I mean, when we talk about K-beauty, initially, people with darker skin tones weren't able to use it, but Turtle kind of changed the game in a way where they, expanded their whole line to include all these different skin tones.
Yes, and it just tells you how innovative they are. So it's really quite a feat for all the players in the sector. And as from skincare, and I'm sure you've seen all the social media posts about the 12-step Korean hair and all of that. So then you talk about, say, Juno, for example, right? People think that it's just hairstyling, but apparently they have a lot of treatments for the scalp. And now scalp care is also very much in the minds of consumers, right? So, and there's more. So I think there's just a lot more that can happen in this sector.
Definitely. Yeah. Well, some great insights from you there. Thank you so much, Chia Peck, for joining me today.
Thank you so much, Hongbin.
Thank you. That was Wong Chia Peck, Senior Correspondent at the Business Times. And again, if you'd like to read more of Chia Peck's piece, you can find it on the Business Times. It's titled Blackstone, KKR Drive Surge in Private Equity Deals in Korean Beauty. This has been The Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.
Money FM 89.3